Aarti Industries is in focus. Mr. Rajendra Gogri is joining us now to talk about the earnings this quarter and how things appear for the next few quarters. Rajendra, good morning. Thank you so much for your time. I see sequential improvement, at least as far as your profitability and margins go. In fact, I must also say one of your peers from the specialized chemical space was also on the channel yesterday. And one could get a sense that the intensity of the pessimism on Chinese dumping, the pricing because of inventory, that correction process has started. Before I get into exactly how numbers could shape from here on, do you think the worst of dumping from the Chinese market or pricing pressures, all of that is behind us? Can we say that with confidence or not yet?
You see, overall, once the global volume demand goes up, I think the impact on of Chinese dumping also should go down. So, in that way, I think as the demand offer, especially the discretionary side, is now moving towards normalizing. I think the Chinese dumping also should be, should decrease going forward.
Okay. Sure. So you expect Chinese dumping to decrease going forward. Let's talk about numbers. There were a bit of a pressure on your margin, but 15, 16, 1% lower, not a big collapse coming in over there. Where do you see the margin gravitate to in the new normal next 2-3 quarters? Can it go back to 20% plus?
As we have been always telling that we don't look at a margin as a percentage. We look at absolute EBITDA because raw material price varies in a big way, and we have a pass-through mechanism. So on an absolute EBITDA, we had around 12% growth, and we expect that growth to continue in coming quarters, both on volume as well as margin growth.
Joining in the conversation as well. Good morning to you as well. And, I also just want to understand in terms of your revenue, right? This time we're seeing a revenue of around 19% uptick on a quarter-on-quarter basis. 1,700 crores is what your revenue is coming at. In terms of the guidance for FY25, are you maintaining that FY25 guidance of 1,700 and above? Is that something we should expect from the company?
Actually, in the mid-year, we have mentioned about 1450 to 1600 crore as a guidance for FY25. And looking at the contract, what we sign and how we see the demand going forward. So I would say it can go up to 1700 also. So we'll put between 1450 to 1700 crores as a guidance for FY25. One of the reasons is also this Red Sea corridor, shipping issues. So we like to give guidance about 1450 to 1700 for FY25.
15 to 1700 odd crores, that's the guidance. But Mr. Gogri, I also wanted to get a sense from you on the newly signed contracts. You've signed a couple recently with the likes of UPL, etc. What else is in the pipeline, and when will the bulk of these revenue potentials start kicking in?
This virtually, this our agrochemical contract, we should have around 60-70% in FY25, and FY26 it should be reaching full scale. Whereas the second contract, which was 1500 crore per year, will get full 1500 crore from this year itself.
Okay, so that's good to hear. But what about the capex plan as well, Mr. Gogri? Because you were undertaking capex plans as well. With the kind of demand environment and export outlook that you're witnessing, what's the timeline of the various capacities coming on board?
Yeah, capex for FY24 and FY25, we had guided about 2,500 to 3,000 crores. So that capex plan is on. And whatever the commissioning which is going to be in FY25, that is all on track. As far as our chlorotoluene range and all, the commissioning will be happening more on FY26.
And just a follow up that I want to understand in terms of your capex plan. Now, what I'm reading is that you've spent a lot in terms of the capex in the last 5 years, and not much is yet coming in terms of your operating performance front. So yes, there was the cancellation of that first long-term contract as well, other factors as well. But when do we see that coming in, even in the operating performance then?
Actually, this FY24 was mainly impacted by this global slowdown because of the inventory correction and all. So, FY25, so if you have around, 1600 or 1700 crore EBITDA, you will see that, sizable improvement overall. And from FY25 onwards to FY28, we see there about growth of about 20% EBITDA going forward. So FY25 will be a sizable jump over FY24.
Mr. Gogri, what are the new areas which you are preparing for beyond 1 or 2 years? One is your ongoing current business and the contract which you are already doing right now. But I'm sure because you have an eye on 2-3 year far out as well, and new molecules, new chemistry which you are working on, which could start contributing meaningfully, even if it takes 1 or 2 year plus.
Yes, we'll be introducing entire chlorotoluene chain, which is currently virtually substantially imported, and there are no Indian supplier in that range. So, which has, a lot of new chemistries and going into ag and pharma. In addition to that, we are also developing products, which for global startups in sunrise industry also. So that also should be materializing in next 2-3 years.
Last question, Mr. Gogri, before we let you go, I want a bit more clarity in terms of the export recovery. When are you expecting that? What could be the volumes percent? How will your product mix change? Because on account of that, your gross margins becomes very volatile.
So you see, basically we had a sizable export. Even this quarter was around 58%. So export, there will be sizable growth in export in next couple of years also. As you know, some of the products where the new market which we have established as a lot of export as a base. So we expect a sizable growth in export.
On that note, we let you go. Appreciate you making time and speaking with us this morning. But for the markets,